Hi, this is Elliot Eisenberg of American Pacific Mortgage, here to catch you up to date on the latest on the economy and the movement of interest rates. So where do we sit? The economy, while weakening, is still strong enough. GDP in Q4 is likely to come in the low twos. By contrast, in Q3 of 24, it was in the low threes. So we've come down by almost a full percentage point, but that's still a pretty strong economy. We know it because unemployment isn't getting worse. On the contrary, it's actually improved. It was as high as 4.1 or 4.2 a few months ago, and now it's 4%. If it's coming down, the Fed doesn't feel any need to cut rates, because if they cut rates, it'll come down further, probably driving up inflationary pressures. Simultaneously, inflation's not coming down enough. Inflation fell dramatically from over 9% in the middle of 22, but right now it's stuck at about 2.5, 2.6. With inflation not falling and unemployment not rising, the Fed's clearly going to hold off on rate cuts until they see what happens with both of those critically important variables. Moreover, there's added uncertainty coming from the new administration in Washington, D.C., and in particular, some of the policies that it's following, it wants to pursue, in particular, immigration reform, tariffs, and some potential tax cuts, each of which have an inflationary bias to them. As a result of that, the Fed, because of what's going on in the economy and inflation and unemployment, and because of what the possible outcomes of policy discussions and decisions made by the legislature and Congress and so on, the president, they're holding off and they're very reluctant to do anything until they see unemployment and inflation move, or they see real legislation and activity going on from Washington, D.C. that they can get a handle on and have an idea what kind of inflationary impacts it will have. As a result of these things, well, we thought 4 or 5 months ago that long-term rates were going to come down. In fact, they've made a U-turn and gone back up. I suspect that they come down in the future because inflation comes down, in part because monetary policy is restrictive and slowing the economy down. But we've thought that for a good long time, and long-term rates haven't come down. So I suggest that you get on with your life, look for the home you're looking for, or sell the home that you've got, and move on, because waiting for rates to come down is, to some extent, it seems like over the last while, to some extent like waiting for Godot. Hopefully you find a house, because there's now more inventory on the market than there's been in years, since back to 2019. So it's a great time to look. Hopefully rates fall in the future, but we'll see what happens based on unemployment, based on inflation, and the new administration and the policies that they follow.